Good evening and welcome to Traders Group. This evening, I think probably the most important thing is to stress what an exciting time it is in terms of the time of the financial year and what's happening on screen. In Australia, if you're listening to this via a recording, it is a period where the market is starting to do what's the beginning of an expansion into a period which is the end of the financial year. If you're listening to this and you're not in Australia, this may not be as important to you, but it still is a period of expansion. How do I know it's a period of expansion? Well, we've been sitting here since February watching the market go chaotically sideways in various patterns that we could try and get our brain around. But at all times since February, the market has maintained an upward trend as designated by the trend line that I've got on screen that goes back to 2016. And it produced of late, April or May, a perfect W pattern on screen, which ended up to be a perfect W and V pattern. What's happened from last week to this week, we can see. The market has broken out. So this is the beginning of the extension. Usually on the right-hand side of a W and V pattern, I have observed, this is the point where we get the fastest rate of change in price. Therefore, if you're still sitting there as an investor, sitting on your hands, and you're not fully invested in the market, you have already missed out on a lot of cash, and you're about to lose, you're about to miss out on a heap more. I just did some quick calculations just using the report function within my super portfolio, and since the April low, my account has expanded 8%. That's a huge chunk of money in the last 2 months in what was an accumulation phase with the market chopping sideways. I've shown you why in previous many times now. I don't think I need to repeat myself that the market is not a single entity. It's a multitude of entities, and within that choppy sidewards moving market or index, the market's been going very strongly to the upside in select industries and sectors. And as an investor, that's your job, is to be positioned. So 8% is going to end up being a significant part of the return that I get. Currently, I'm just shy of 18% for the year. Hopefully, I think I should, if this keeps on going up into the next 3 weeks, I should do plus 20%, which is very, very unusual to get such a high percentage, but it is what it is. So that's from the investor's perspective. From the trader's perspective, if you've been trying to buy options in the past 4 or 5 months, it's been hellish. And the reason it's been hellish is because the implied volatilities of those options, if you're a pure buyer, have been washing away any directional movement. And that directional movement's been muted by extremely volatile environment. So I've already said this. The last 4 to 6 months has just been really difficult for people who want to directionally trade and trying to get big extensions of the market. They just simply didn't exist. That is now finished. The point of the breakout within this pattern means that we should get, repeating myself a little bit, strong directional movement for the next X amount of weeks and months ahead. Combined to that strong directional movement, if you go have a look at the implied volatilities of many stocks, not all, the implied volatilities have washed away with percentile rankings of 1, 11, 9. I know this because I was doing this yesterday with a client. This, in the right stocks, is perfect and optimum time to do directional trading to the upside. Low implied volatility, strong directional movement. This is it. So it is a time of opportunity, and I find it kind of exciting. And I'm just hoping we still get this upward push. There's no negatives in the market. There's no geopolitical fears. I suppose the only threat would be the love fest happening in Singapore between the North Korean dictator and Mr. Trump. I'm forever positive that reason will be discussed and they'll map a plan forward. So it'll all be good. I cannot think of another big negative on this planet that could derail what looks like an expansion. And if we're in the beginning of an expansion, that means that we could have this upward movement into traditionally the most volatile time of year, which is generally speaking, it's September, October, can start in August, but generally it's September, October. So this is looking really, really good. It's not only looking good for strong directional trading with low implied, it's not looking only good for investors, but those people in the room that have engaged in spread trading, that is, that have done our diagonal spread trading course, are now coming into that environment which is optimized or optimum. And, just in the last week, there's been a couple of trades, and I think the overnight S&P 500 is, already moving up again. So another up night, and there's a potential to be making really good profits every 2 or 3 days. It doesn't always happen like that, but that's just the environment that we're in. Just reading. Richard's just entered the room. Richard, I'm just reading your message. Okay, great. Richard's just saying he's got good sound. He's had a few computer issues. So S&P 500 is looking fantastic. I just want to, I'll go through the other economic blocks, but I want to zero in on a couple of specific sectors which are having spectacular breakouts. This index hasn't broken out, but you already know, we've been following it. Tech and consumer discretionary are just going ballistic in the US at the moment for good reason. But let's go do a quick whip around the world just to get a sense of what's happening in different economic blocks, such as Europe. The first one is the DAX. The DAX we can see through EWG, but there's a currency effect on the chart because it is traded in New York in US dollars, and it looks pretty ugly when I look at this chart. With expectation of an accumulation phase, I would have thought that was going to come in weeks ago, and it looks really ugly, but I must admit it's being affected by the currency movement. So probably the best way to look at Europe is through the DAX, and the DAX looks pretty impressive. It's done a really nice accumulation phase, WV, big extension to the upside, and yes, it's had a pullback, totally normal. After this pullback is finished, what's it going to do? It looks like, probably happen in the very near future, it'll do another nice extension, and that extension will probably break the market into a new high. Is there any issues with Europe? No. Is there any issues that we've had recently? Yeah, that's the Italian. The Italians were giving us a little bit of fundamental issues which were causing volatility. So the Germany is the most stable, most powerful economic region within Europe. It is the leader of Europe. It holds Europe together, and it's looking really good. Coming across to China. China is the odd man out. When I look at the FXI, which is Exchange Traded Fund, traded on nicely, it has been struggling, just slowing down so the picture caps up with my voice. There we go. So it has been struggling to break out of this declining triangular pattern, and even theoretically, it hasn't even done a higher low. That retest last week, it did bounce. Okay, so once again, it's bounced off $46. So this is a significant level of support, but really it hasn't done a confirmed higher low because it hasn't broken into a new high. So I can't get excited about FXI being in a trend just yet. Shifting across to Shanghai Composite, I don't have actually any real fundamental explanation for why China has is the only economic region which is really, I suppose it's worse than Australia. It's not looking wonderful, but it's not bad. There's no negatives there. It just hasn't moved. And I associate that with the ongoing trade discussions between the United States and China. And it's probably to China's detriment, hence they're factoring in a bit of a slowdown. That's all fine. The good news was one of economic growth within the Australian market, as you heard on TV last night. We had a quarter of very significant growth. I think it was GDP figures of 3.1. This is really good numbers, above trend. And that only can feed into a continuing rising Australian market with one caveat, the caveat you listen to on TV, and that is the finance sector. The Australian market, and I was talking to Richard earlier this week, I believe we're in a roaring bull market. I'll show you why in a moment, but we can't see it. We can't see it because you're looking at an index. If you look at most sectors within the Australian market, most have been breaking into new highs constantly, and they're looking really, really impressive. The negative is, as we know, it's finance, and it remains to be seen how long finance puts a damper on the market. That said, stock markets are forward discounting mechanisms, so they'll only sell it off so far. Even if there's additional negative news, they would have factored it into the price, and hence that's what we're seeing this sell-off. There'll be a point where the analysts say enough is enough, and I think Richard Mate gave me a number today. Enough is enough, and they've factored in any contingency that could happen in the next 2 months, and that's when it'll bottom out, and that's when they'll start buying. And when that happens, you watch our market go. And the reason I suggest that's a probability is because I'm going to come across now to some of the sectors within the Australian market, and we look at them, and they just look so good, such as materials, sub-industry, metals and mining. Really impressive breaks. It's about to break into a new high. The leader of the Australian market is healthcare. If you've got into healthcare stocks, you are doing extremely well. Information technology, about to break into a new high. Consumer discretionary, I think it's breaking into new highs. Energies, looking impressive and strong. I've got a few doubts on the continuation of energies. Consumer staples, haven't looked at it for a while, looking like it's breaking into a new high. REITs, which is a division of finance, slowly grinding its way up. Industrials in Australia, it's slowly grinding its way up. And now we come to the worst three. The ugly sectors in Australia are finance, telecoms, and utilities. I have already given you the sub lesson last week about don't look at finance as one entity because it's made up of different industries. And I demonstrated last week I am in finance in Australia. I'm just simply not in banks. I am in finance in the United States. I'm simply not in banks. I'm sorry to repeat myself. But within the States, I found an industry called diversified financials, which is mainly broking companies. And in Australia, it's fund management, listed fund managers, and they're all going through the roof. So, if you can find the right industry, that's where the action is. And I have obviously got exposure to finance just within one industry. So if we could just dump finance out of this equation in the last 6 months, and I look at the rest of the market, we would be skyrocketing at the moment. So I'm very, very hopeful that the stories and the negativity in finance finishes, although the Royal Commission is going to October, but the factoring in of the negativity finishes, we see a bottom and the market starts to move up. I look at this almost daily. And when I look at things like WBC, breaking into new lows yesterday, CBA, breaking into new lows yesterday or last week, NAB, breaking into new lows. Probably my comments are a little bit hopeful, I think, but there is a time when it'll finish, and I'm hoping it's not too distant. There is no lows in the major banks. They are trending down, but they're getting to points where they're so oversold. I just cannot imagine them selling them off forever. We'll see. I'll stop there because I don't know when it's going to stop. It's in my hope list. I hope it's soon because that'll factor in that bounce. And some of those stocks are actually becoming, fundamentally, they must be great buys. I think their yields are, I understand, are very impressive. The market will recognize that, and you watch the reversal. The reversal will be dramatic, and it'll be sharp, and most people will miss it because it'll be driven by institutions. And guess which institutions will do most of the buying? They'll be doing their own. They'll be doing associated funds within those banks. Will be doing the buying. It'll happen all very quickly, but I don't care. It's irrelevant. It will support the market. It'll support the index. It'll support all other sectors. So I'm very buoyant on those sectors. Just coming across to a sector rotation chart while I'm on the topic of the Australian market, we can see it visually just in a different format. Healthcare, the leading sector, metals and mining, the second leading subsector of materials. Energies, I have a few doubts that energies is going to continue this strength. Energies has had a fantastic run, but I can see from the perspective of institutional buying volume, it's dropped dramatically in the last few weeks. So I'm going to watch that very carefully. Materials, strong. Information technology, strong. Consumer staples, I'm just seeing it via a chart now. I'm seeing it from a strength perspective. Consumer discretionary, strong. Property trusts are great. Industrials, average. Utilities, I don't think so. Financials look horrible. And telecoms are just the biggest horrible sector in Australia. So the picture for Australia is one of strength, one of bullishness, as long as you're not focused purely on the index, and as long as you're in the right sectors and industries, you should have an excellent return at the end of this year. I believe the index has done about 8% or 10%. I'm not measuring it. I am targeting plus 20% this year, which would be good for me. But we'll see. I don't want to claim that just yet, but it's not too far off. Let's come across to the United States, because there's two sectors which are absolute standouts, and I'm going to isolate them. The two standout sectors at the moment are these two. And maybe they're not obvious. Actually, I'll put up three. I'm going to isolate them. And the reason they are spectacular and they are opportunities is because what they are doing and where they're positioned on this chart. They're doing what I've pointed out to you many, many times. When you see something on the right-hand side of this chart doing what's called a right rotation without doing a rotation into the lagging quadrant, it is telling me that they are sectors or industries that have had a small pullback and are getting ready for a very large push. So if we just go and isolate these three charts, that's the tech sector, XME, which is a subset, obviously, of a sector, and XLY, which is discretionary, and we'll see some very large moves to the upside. Let me just grab those three sectors. And I believe it's completely understandable from a fundamental viewpoint why they're making their move. First of all, technology is already broken into a new high. It looks like IWM. Technology has broken into a new high. It hasn't even waited for anything. In the past week, it's had this massive move. So this isn't a shock to anybody, because we've been talking about this for days, weeks, and months. And tech has been the strongest sector since April, when I started to weight my portfolio a little bit more towards tech and consumer discretionary than other sectors. So this has had a really good push and will continue to have a push. Obviously, the chart has gone that hard that quickly. It'll start to, in the next week, be way above its moving average, and you know what would happen. If it gets too far above, it has to come back to the average. We know that. The second most exciting and strongest sector in the US markets is the consumer discretionary. It is fairly clear fundamentally why it is such a strong sector. The US unemployment numbers were below 4%. I think they said it was 3.8%. Unemployment within the United States. From an economics, if I was an economist, I would tell you that number represents full employment. And the reason it represents full employment is there are people that can't work, like the elderly. There are people that are transitioning from one job to the other. There's ladies that are having babies. And there is a very small fraction of people that haven't got a job because they don't want to have a job. They'd rather sit at home. The fact is that number is a full employment number, and that is staggering. And that full employment and the growth in the United States is starting to fuel a big push within consumer discretionary stocks within the United States. And that fundamental story has been a progressive story for at least 6 to 12 months. So this again is no shock. One interesting fact about that sort of growth, we're now talking about growth, and I don't know whether it's sustainable in Australia with our GDP growth. We'll see, because it may be a one-quarter event, and we need it to continue. If we start growing up into the high threes and early fours, they're the days where you should be, as a private enterprise person, run off your feet. I personally have not experienced that. I'm not going to tell you how long it is. It's a long, long time. And I'm connected to people, and I own or involved in multiple businesses. I know it is tough for the small businesses. I mean, I've told you I'm involved in a brewery, and I'm involved in a wholesale distribution business, and I also involved in this business. So I know exactly what's happening out there in wholesale land and in finance, and it hasn't been pretty. And this could be a turning point. I'm hoping for Australia and hoping for the average guy out there, because as we are well aware, when I was listening to the Treasurer talking about the growth in Australia, I was getting angry listening to him on TV, because I felt there's a disconnect between what he's saying and what I know to be true and what I'm experiencing and what I know to be true for many people around me. So I find it a little bit unusual, but I'm willing to give him the benefit of the doubt, wait for another 6 months, and hopefully we're in a period of really strong growth that flows through to higher incomes for private enterprise, which then flows into higher wages for employees. So it should be a good growth story, and that'll flow through to equities, and then you'll see the market rally. We haven't had a good rally in the Australian market for such a long period, and when I say a good rally, I mean a strong rate of change of growth. We haven't had that for so long. It's crazy. It's all been very slow, mediocre performance. You can see it on a monthly chart. The most exciting time I've had in the last few decades, I'm just going to bring up the chart, was the period from 2003 to 2007. You couldn't do. Can everyone remember that period? Everyone's old enough in this room. No one's a baby in this room. That period, you could do no wrong. Doesn't matter whether you were trading or investing, the directional market movement of the market was that insanely strong. It was too easy. And then from 2009 to the present day, the rate of change of growth in the overall market has been extremely slow, but maybe I'm a silly optimist. We'll see. Okay, let's just come out of that. Coming back to the daily chart. And just looking at some other numbers that support a picture of growth. When I look at the institutional volume behavior within S&P 500, IWM, it is really, really strong. When I look at the volume behavior within EWA, EWG, and FXI, it's nowhere nearly as strong as the US markets. And that's, I think, reflected in the charts, because the US seems to be expanding very quickly. Australia, China, and Europe is just starting to get moving in terms of its equity charts. There is just one chart I'd just like to grab, and that is IWM. IWM has already broken into a new high. It is going ballistic. And if you had the majority of your portfolio in the United States and it was focused on small cap stocks, you would be making a very outsized profit at this moment within your investments, and fantastic, because that is going tremendously strong. And probably once it gets ahead of strength and momentum gets in and money starts coming into the markets, it will continue to do so for days, weeks, and months into the future. Other very positive elements to the market is I'm monitoring advancing and declining stocks in the US, and the advancing stocks in the US last week was 265, 224 declining. That's a split of the S&P 500. And this week it's 272 advancing, 216 declining. So it's a modest increase, which supports an upward moving market. As I've pointed out many times, it's not that number, it's actually the volume of the numbers. And I can tell you that the advancing stocks are doing 30%, 40% more volume than the declining stocks, which is a huge positive. When I look at new highs and new lows of the market 3 weeks ago, There were 21 new highs, 3 new lows last week, 19 new highs, 4 new lows. This week, 27 new highs, 6 new lows. Again, it's internal numbers which point towards very strong markets. And I think I'll stop there because I think you get the message. I have got some lists of stocks which I'll tackle, and I was working with a new client and he wanted me to find him a group of tech stocks and discretionary stocks which were potentially going to lead the market as this market expands. I'll give those to you in a moment, but I just want to go through currencies and gold and the like, and oil. Let me do currencies first, and obviously my currency discussions is limited to one pair, which is FXA. FXA, let me bring it up on a weekly chart because it's the only way I can get a reasonable perspective of the chart. And we know the FXA, the Australian dollar versus US. If you've got a black screen, so have I. If I stop talking, come on, hurry up. Okay, here we go. So we can see this FXA has been going up in this channel, and just recently it broke the channel and broke down. And I've been very bearish on the Australian dollar, and maybe that is wishful thinking, because in the last 3 weeks there has been a big shift in the sentiment towards FXA in terms of volume behavior, which has been rising. So volume behavior has been supporting the market since it broke out of that channel. So have we got a low within the Australian dollar? Well, I noticed since last week it's had a very large rise. I noticed that the average is pointing up, which is all very disappointing for me. I want it to collapse, and I'm still a little bit undecided whether it's a counter trend for the next fall, but it's certainly starting to look like that this is a low within the Australian dollar. It's had such a rally in the last few weeks. It has to come back. It's too far above its average, but it is kind of looking like a low, and it's not in the not too distant future. I'll start drawing pictures. In fact, I could probably start drawing a pattern which we all recognize to be a W pattern. So when this market comes back again, if it breaks that trend line, we'll see what happens. It's a little bit early for me to get too excited. I'm not trading currencies anyway. You know what my interest in? My interest in is in my overseas exposure. Having a look at the US dollar, we'd expect to see the US dollar looking almost exactly the same, but in reverse, using the US dollar ASX pair traded in the Sydney Securities Exchange. We know that's had a significant breakout. Probably most importantly, that breakout was a higher low, and also in the past week it's done something to indicate a little bit of weakness. The indication of weakness, if I slow down a little bit and let the daily jump up on the chart, we've had a major break in the last 3 nights where the market has broken trend, and we've got lower highs on the screen. We also can see that the average is starting to point down. Those two things, that is a break of trend, average pointing down, series of lower highs, indicate the market has broken trend and now needs to go through a period of accumulation before it can go up again. So we'll see. So it kind of looks like that the US dollar has had this huge rally, has topped out, and that means all other currency pairs will start to do the same against US dollar. When I look at the volume picture for the US dollar index, it does reflect a significant amount of volume weakness. If I look at the volume pressure on FXA, which is one currency, it's significantly risen and supports the contention of upward movement. And that's only changed in the last 2 weeks. I need a few more weeks to get excited about that. So when I say excited, disappointed. I'd love the Australian dollar just to collapse. Okay, looking at oil. Just give me one moment. I am well aware that the oil, as we all are aware in Australia, that oil and the Bowser price for general fuel has been going through the roof. But something is happening within the oil market which is putting a dent in this rally that started in February. although I did this rally live in this room, I never actually bought any shares, or I never got on board. And as it's been going up, I've had this regret thing happening in my brain. Now I've let it go because the market just broke trend. Not only did the market break trend, the average is pointing down. It's even broken the flatter trend line that I drew last week. Therefore, I can see two things happening in USO. There's a major shift in the volume behavior to the negative. I'm talking a complete 100% turnaround, and it kind of looks like there's weakness coming into the oil market. Where would that be coming from? It could only be coming from increased production. I think Russia and Venezuela, in response to sanctions against Iran, said they're going to pump more oil. Hence, the pressure is off in the oil market just at this point in time. And therefore, it's not although it ranks as one of the strongest sectors in the market, I've got my reservations, and I don't care whether I trade something or not. So I'm not involved, still not involved in any XLE stocks or anything to do with oil. I'm just bringing up the XLE chart, and I notice XLE looks like it has broken trend. Whether that evolves into a more significant decline, we'll see in the next few weeks, but I'm not involved in it, so it's absolutely fine. But I'm just saying it looks like it possibly could evolve into a breakdown. There's so much good stuff out there, you don't have to trade it or invest in it, so it's fine. When I was on the currency story, I jumped across and forgot to do gold. Gold is a currency. Why? Because it's a storage of wealth in times of fear. Traditionally, that has been true, and it is still true today. It, as a consequence, has a high correlation to the US dollar. If I have a look at the gold index basis, the GLD ETF, bring it up on a weekly chart, and it tells me that we are in a very slow momentum uptrend and have been in that since October 16. In terms of volume, I have suggested that there is the potential for this to break that trend line and go down. That said, if it's a currency and it has a negative correlation to the US dollar, and I just said to you there's a potential for the US dollar to have topped and broken to the downside, that puts an underlying level of support on this trend line, and we would expect potentially, if that is true, for accumulation to occur. I am not blind. I can see on the trend line it's gone and done a test and retest, and it didn't break through. So I'm not getting excited yet. Why? Because the moving average is pointing down, and it's just too early to say that that's a low in gold. It's a kind of a logical place for it to occur. It's at the bottom of the channel. So maybe in the next week, for those people who are preemptive and like a bit of risk for the gold bugs, maybe you'll go and jump in and you'll buy a bit of gold, or you'll do something in the gold space. What I do note is when gold does rally, it does pretty high momentum moves. Just check it out. In the last two bounces, can you see this? The last two bounces off that trend line, it really has gone quite mental. So maybe that is an opportunity, and maybe if I come to the conclusion that that has formed and completed accumulation, maybe I should have a list for you. I haven't got any list tonight because there's no accumulation, and that's where I'll leave it. Just coming across to XME to finish the different chunks of the market. XME, we've talked about this a squillion times. This is the one that was doing the right rotation on the sector rotation chart. It's going through the roof, breaking into new highs. Doesn't matter whether I'm looking at XME or XMM, which is the Australian chart. Once again, good looking chart, fantastic strength. We've known about this for a long time. The pullback was an opportunity. It still is an opportunity. Think about this. If that's an extension starting to happen, where will the extension go? Fairly easy. Grab the range of the previous mark it up from the current low. It'll probably get up towards, the 4400 level on this particular index. It simply represents 100% extension. So once again, it's just another area of the market, which is very encouraging. There's another encouraging thing within metals and mining. I'm not sure whether we get local West Australian news onto the East Coast, but on the news the other night was a guy I know from one of the mining stockbroking firms in Perth, all they do is do mining. And I know him personally through sailing, and he was saying on telly the other night that get ready, it's happening, and it will become obvious in the next year that mining's back, and we're in a really strong period of expansion. And here's one to know: he's not the type that talks the market up, but he gave some pretty good fundamental reasons, and I believe that. I've not known him talk rubbish, even on TV, or maybe he's talking about his own business. But that said, it says that's what's happening on the chart. The only weak link in this strong rally is China. I don't quite get. China is usually super correlated with this chart. It's not disconnected at the moment. We'll see how that unfolds. Okay, opportunity. Okay, Brian just typed me in a question. He says, what are your thoughts on UNG? Just let me type in the code, Brian. UNG. That's an ETF representing natural gas in the United States. 2 weeks ago, I mentioned that, again, mining types on our tally over this side of the country were talking about a substantial deficit in supply, and our cousins in the east coast of Australia are going to suffer dearly. Everyone's been whining for a decade now due to the lack of infrastructure and energy on the east coast, at least. And he was saying it's going to go through the roof, or it's going to get higher. So my opinion is based fundamentally, and I can see a chart moving up, and maybe there is some room for some long-term exposure within the natural gas market if they're right. Don't look at natural gas as you would oil. It's obviously something different, and I need to do some further analysis on that. I'm just going to write myself a note, Brian, because to answer your question properly requires quite a bit more than looking at a chart, and I'll do that for you next week. Opportunity. Okay, 3 nights ago I was with one of the guys. His name's John. He's not in this room, but he's just finishing our mentoring course, and he asked me, after identifying the 2 strongest sectors in the US market, to give him a group of stocks which have got a high opportunity of growth in the not too distant future. I think he's a credit spread writer. So I identified the strongest industry, and I identified the strongest stocks within those stocks that comprise XLK. These are those stocks. And some of these stocks I own, and I have owned for quite a while. GDDY. I'm going to leave these on. We'll visit these in a few months. SPLK, I own this stock. FTNT, I own this stock. I've owned it since April. This is on another list that I gave you back in April. INTC, there's only 2 more. MA, an unbelievable break in the last week, and ADBE, Adobe. Okay, so they're the strongest stocks I could find within tech. Strength begets strength. If we're just in a breakout phase, in the next 2 months, they should be, they should go quite strongly, very strongly in the next months ahead. Okay, let me come down to consumer discretionary. Remember what the discretionary chart looks like? It's in a breakout mode. It's already broken into a new high as of last night. And the 4 strongest stocks I could find in that particular market is ETSY. I'd make you note when I was talking to him, which was 2 nights ago, I mapped out W pattern on screen, done a pullback. I think he's in this, and then if he's in it, good on him, because the market's already gone from $32 to $34 in 2 nights, or not quite, but close. Probably will keep on going, and that'll be a good trade. GRUB, it's looking good. I own it. And I think I also own ETSY. A bit more of a complicated situation with an inverted head and shoulders pattern, but it's now broken above its neckline and looks like it's going to make a move. One of my most favorites is Netflix, only because I'm such a heavy user. Go watch, I love watching it. Wonder Woman, I was watching that last night. Fantastic. But let's not talk rubbish. Netflix, look at this break. I've owned Netflix for a long time. It's looking really impressive. And CVNA. So these are stocks which there's a W pattern on screen with a pullback. 2 days ago, that hadn't broken, but now it's broken. That's not the only list I have been monitoring. If you recall, back in April, I gave you some tech stocks, some mining stocks, and I'll just do the first two because they're the two strongest sectors. And many of these stocks I own. And when we looked at these stocks the first time, often the market was actually falling at the time, and it's very difficult to get your brain around why they could be a good investment because you can't see into the future. But then you start looking at things like Amazon. I didn't buy Amazon. I can't and don't want to pay $13.50 a share, but now it's at $17.25 a share. Not too bad. I definitely own Netflix, bought back in April. I definitely own GRUB, hasn't gone anywhere. I definitely own SFLY, bought it back in April. And ETSY, I can't remember whether I own that or not. I think I do. Looking okay. In terms of tech, this is the stuff we picked back in April. SPLK, I don't know whether anyone's traded any of this stuff, but this was mainly for people building portfolios. So I don't think any of these stocks have done anything but do a slow grind to the upside as at the same time as the indexes track sideways. These are the strongest stocks within the strongest industries, within the strongest sectors of the market, and once again proves sitting there on your hands in an accumulation phase will cost you 8%, because that is exactly what I told you I've calculated from April low to the current period. 8% is what my portfolio has grown, and that's what people miss out on, because what they're doing, they're listening to commentators tell them the end is nigh, the market just fell, and they justify their thinking of nothingness, doing nothing, because they're scared, and that's okay. But the money is there, has been there, and I'll say no more. It's been good. We've had that discussion many times. There's just two other stocks. I'm nearly done. I think I'm talking way too fast tonight. Sorry. Okay, so just a couple of stocks I just want to quickly breeze over. And it was, I wrote them down somewhere here. It was this one. Yeah, this one. I know what it is. It's the one Alan from New Zealand gave us. Here it is here. LYC. It was just a great, remember 3 weeks ago I was saying Netflix was a great buy? Well, look at this. This is a great buy too. If we open up the chart a bit. So for those people who are looking for a good stock, look at that. In the last 2 weeks it's bounced, it's doing accumulation, and she'll do an extension which is probably equal to or greater than the previous extensions in the market. So you can already calculate roughly where it's going to get to. Probably get to $3 or above, and it's at $2.51 at the moment. Are there any other notable things that I watch? Not really. I have been keeping my eye on TTT, but to be honest, I've lost interest in a lot of this. TTT has had a nice pullback, still hasn't made a move. 3AD, which is A3D, which is the same, into printers, made my money, left the market. I've sort of lost interest. Bob was around, but he's not around anymore, so I've lost kind of interest in these small caps. Don't care. I don't need small caps to make money. They're interesting. They're just punts to me, and we've had that discussion where they have this huge rally, then they fall away like this stock for days, weeks, months and years. The money is at the first IPO and the first few months, then it's gone. And so I have sort of taken my eye off the ball, not interested in them anyway. Okay, guys, I think I've done everything I need to do this evening. For those people that are involved in the diagonal spread trading, you couldn't find a better time to be engaged in the market. Now is the time. I can't stress that enough. Or for directional trading if you can find low implied. But that's it for this evening. Thank you very much. What's the time? I'm a little bit ahead of myself. Thanks very much, and I look forward to seeing everyone same time next week. Have a great week. Thank you.